Hello traders, it's Samurai Trader here, giving you a recap on the Euro USD 5 range chart for last what time do we go back till? We'll start from 10:30 a.m. yesterday, so almost 24 hours of market action. And let's have a look at some of the great trade setups that we had. Now, one of the huge advantages, of course, in trading Forex is that we have thousands of traders around the world trading this market. The best times, of course, are the open of the London market and the New York market. And what makes FX so great, having so many traders trade it, is that it becomes very predictable. That is, there are patterns that repeat themselves every single day. And the market, and as I say in training, the market has a memory. So why do so many day traders trade this particular market? Well, it trends so beautifully. And as much as we've seen some challenges in the Forex market the last 3 or 4 years, the market has become very fair. That is, the brokers, we're getting much better spreads, much fairer spreads, and we've seen the regulators crack down on the market on a global basis. So providing you with a good broker, a reputable broker, you're not going to have the issues that we saw 3 or 4 years ago. So let's have a look at some of our classic setups. Now remember, as you hear me repeat every single day, the trend is your friend. So please traders, if you're a new trader or a newer trader, or you just want to just have smooth sailing 99% of the time, trade with the trend. And what we can see is our equiline up here is our cyan is our 89 and our 200, and of course we can see we're in a very clear downtrend. So starting from the left, we had a perfect, now this is a counter trend trade, but for our experienced traders, this is a classic T89, which is a superb trade. And remembering, each one of these candles is worth $50 if you're trading a standard lot, or $5 if you're trading a mini. So your stop is going to be tucked just under this little swing low, and that was a very nice trade. And then we had a classic 89 bounce signal with a T1, another classic 89 with the T1 signal. Further down here we had another classic T1 signal right here. And this is one of the things that I love about Forex. If you have a look at this here, have a look at our platinum and the divergence. So we've got a perfect bounce off the pivot levels, and we have divergence on the platinum, and I've got a lower low in price. An absolute classic setup. Further up here we've got a T10. Now a T10 bordering on a T2. Now what about this one? You may say, well, look, why didn't we take this one? Because we can see here the market's still coming down, our paint bars have painted, it's given me a signal. Well, very simply, if we look at our zero lag, we can see here that it's still cyan. So then we had this plot right here. We had a rising long-term stochastic, we've got a T2 with a T1 signal and a perfect trade. Then we had a beautiful 200 bounce off the pivot. So we've got a lovely double top here. So if you didn't get on this particular bounce, you would have got in on this one. Further along, we've got some pivot bounces, but there's no particular reason why you would take those two little bounces there. You might have taken that little one because of the rising platinum that we've got right here. Let me just mark this up for you. You've got this little platinum here that was good for a little scalp, but remembering, when you're hard up against your 89 and your 200s, they're usually going to act as support or resistance in this case. So therefore your targets are going to be very small. And remember, we're about trading probability, so there are much better probability trades than these ones. So we'll give those a miss. Jump onto this one here. We had a beautiful 289 bounce. Traveling right along here, we had a little T1 signal right here. Now with this particular one, of course, your stop is tucked in up here. That was only good for actually about 8 pips, that particular trade, and you would have got out down here. And the reason being, what can we see setting up? We've got lower on price, and of course we've got major divergence and about to get a zero line cross, which is an exit signal for us. Another 200 bounce, another 200 bounce. So look at these bounces, 1 2 3 in a row. Then what have we got down here? Getting back to what makes this market so fantastic to trade. We've got a T89 trade a classic T89. And one of the very important things, traders, is that out of the 12 core trading strategies, let me say that again, out of the 12 core trading strategies that we have, they're 96% mechanical. What are the discretionary things? Well, number one, looking at the chart, do we have a trend? That is, are we in a downtrend? The answer is yes. So do we have any red flag news announcements? Well, we need to check those. That's why I'm not going to say they're 100% mechanical, but they're pretty close because they're totally rules based. And we can see here we had a beautiful T89 that went up there, gave us a little T1. And by the way, when you get a T89 trade, as we did here, we don't trade against them. Okay, so when you get a T89, you're just going to stand aside because a T89 is a really good indication of a change in trend. We've got great angulation. I won't go into all the rules here now, but that's a classic T89 along with the one a little earlier. But then this formed a lovely T7, which is a double bottom, and if you weren't in on this candle here, you had an entry on this candle here. And then look at our platinum. Look at the platinum there, look at the platinum there. They're just classic divergent signals. Moving along up here, then we had another beautiful T89. We can see I've marked it up here. Just a classic. Look at the angulation between, or the price action outside our channel. That's a beautiful short, and another T89 here. So what's that? I think that's 5 in a row we've had in the last 24 hours, and then formed a double bottom. And this is once again what makes the FX market so good to day trade. It's so predictable. Patterns repeat every day, day in, day out. Remembering trading is about probabilities. Now remembering our indicators are only tools, and like any tradesperson, it really comes down to the experience of the tradesperson using those tools. And in our business, it comes down to screen time. Now, someone said to me actually only last week, how long does it take to learn how to day trade profitably? And my answer was, how long do you want it to take? And they gave me a puzzled look, and I said, look, it's really quite simple. When you learn how to day trade the Forex market, futures or stocks, you start off with one trade setup. You master that one, you own it. Remember, every master was once a student, and exactly the same with day trading. So in this particular case, you're going to start off by day trading using the T1, which is a trend following strategy, then the T2. Both of those are very visual. Then on the Forex market, one trade setup that I then teach you very quickly, I want you to learn once you've mastered the other two, is the T89, because it's a very high probability trade. And you had another T89 right here. And as I've got here, beware trading against the T89. We then had a lower high, and away the market collapsed. And let's have a look at where we are right now with the market. We had let's see, what time was that? The market started to quieten down 3 a.m. Australia time. We had another 89 bounce. If you hadn't hit your profit target there, you would have hit it down here. Then we had another T89 we're in. And remembering now, we're heading into the Asian session, so the market is a lot quieter right now. So in summary, these patterns repeat every day. And one thing I wanted to show you, I received an email yesterday from a trader, and as most of you know, I'm I heavily trade the ES, the futures markets, and the NQ besides Forex. And they asked me which are my favorite markets, and I said, well, really in the Forex, that is. I said I love the Aussie dollar. We've been getting some great trends in that market, and of course the euro dollar. Why? Well, lower spreads overall and great liquidity. So very quickly, let's have a look at the Aussie dollar 5 range. Now, one thing with the 5 range, if you don't want this many trades, all we do is increase the time frame. So this is a 5 range bar. You might go to an 8 or even a 13. The patterns repeat in every time frame. So if we go back to yesterday, so this is actually the 26th of the 3rd, lovely double top, once again a 200 bounce, a 200 bounce, a T1. Look at this here, a nice little double top formation there, triple top actually, T1, T1, T89, T89. It doesn't matter what market, another T1, a T1, a T89, T1. This one here, here's a loss. Okay, this one you would have been stopped on, but then you had this one here. So traders, the setups work on all time frames and all markets. So what I want you to do as you learn to trade with us is to focus and become what I call a sniper. That is, master one setup. Remember, snipers are disciplined, they're focused, they have patience. That is what makes a great day trader. So traders, I hope you got something out of today's recap. The euro dollar 5 range, fantastic market to trade. The only thing is, of course, remember to check for the red flag announcements and exit well before the announcement, and of course give the market a bit of time afterwards to move. Until next time, good trading.